And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, June 29th, 2021. Market continued to rally, and then it fell in what I'm considering to be a small fourth wave. And now it started to rally, possibly. Maybe we have a little bit more downside, not sure. But here's the story. We're starting on the 15-minute chart, as you can see. We continue to count the minute wave 5. Let me just back out to the hourly so we can see it a little bit more clearly. What we are counting is we have the minute wave 4, we're in the minute wave 5, and it is subdividing. So that's subminute 1, 2, subminute 3, 4. And now we're in that subminute 5, and it is also subdividing. So these are sub waves. But it appears we may have completed sub wave 1, sub wave 2, sub wave 3, sub wave 4. What does that portend? We're in that final rise. Unless I got to change this count, which I'm very comfortable with right now. I don't see the necessity to pull it out even further, unless this third is going to end up here, and this is a fourth wave, and then we still have that sub-minute wave 5 to go. That may be the case. We're just going to see how this all plays out. So I'm going to leave the labeling as is, go back down to that 15-minute chart. And so what I've now added, I've layered in, first we layered in what we believe for the subminute wave 5, where that can complete. And that are these numbers here. So we almost got to, well, we did get above it, but we almost got to 42.92. We got to 91 today. And let me just go back here for 1 second. Stay with me 1 second. I got so many Fibonacci's on there. I've got to realize which one is doing what. Okay, so we are measuring the subminute 4. I have not included the minor wave 5, but that already projects to 4,300. That much we know. So now we're just trying to narrow it down. So I've projected for the minute wave 5. And now I have gone inside and I'm projecting for the sub-minute wave 5. And then within that, I then put up a Fibonacci extensions for the sub-minute wave 5. So we've got wave 5s going on all over the place. And so where they all seem to line up is right here at 91, or 92 actually, which we basically got to today, backed off. Now we likely will go through it. Then we have 42.96, 4,300 to 01, 06, 09. We do have our higher levels where we could get all the way up to 38 or 29, but that would be a really strong push. But it could happen. And how it could happen is that I'm going to have to move this third over to here. This is a 4, and we still have all that. That would open territory for there. I'm going to leave it as is right now. Let the market tell us. That's what I have to do. I have to allow the market to tell us. Right now, I'm thinking it's going to stair step its way higher and get to 4,300 and start to really get into this cluster right there. That's what could finish this whole picture for us, completing all the way up. So we're completing let's just start on a minute wave 5, actually a subminute wave 5, a minute wave 5, a minor wave 5, an intermediate wave 5, and a primary third wave. We got a lot completing up in these areas up here, and we've been tracking it for quite some time. And so I still expect this to all finish. And then I am expecting a primary fourth wave correction to begin. And it should kick off with a very sudden and strong down move. Sellers move in, they've had it, they're done. and they begin to sell, and it just starts to drop. Why? Because number one, we're in uncharted territories. Number two, we know that markets tend to go to value. So once the selling starts, they're going to have to drop it to where value is going to be found. I don't think up here, new high territory, that they're going to suddenly develop a large area of value. So I think that's why we'll come down pretty quickly as those sellers start looking for value. Where can they unload? Where do they have to take it? So we'll see how that all plays out. For tomorrow, I again don't suspect that we're going to get. We did get a decent decline off of that, but not any outside of the S&P's norm. So normally the S&P will pull back between 6 and 11, 12 points. That's what we got. It was 91. We get down to 77. So a little bit longer, but now we're rallying back up. Now, if I had to move this 3 over to here, then that wave 4 would be likely going to start coming back down to these levels, at least down to 72, 42.75-ish, maybe all the way back down to this area. That's if this is a wave 4, because it would then drop into this wave 4. So we're going to leave that open. Let the market tell us. But if we do start and we start to come off, it doesn't mean that the highs are in and we're just going to start diving. Could happen, but that's not really what I would be expecting. Not when I still believe that we still have additional upside to complete the wave pattern. So we'll see. So I do suspect that if we move that 3 up, we'll get a little bit larger 4th wave, maybe down into this area. But then still the rally. If it rallies from here, it's got resistance all the way. So if it flies through it, it's going to be the power of the buyers, because I think that as we have seen in the past, we get these bursts, they run and then they go off. They run and then they sell off. They run and then they sell off. And that just does seem to be the pattern thus far. And so this one, if it goes up, comes down, goes up, comes down, goes up, comes down, it's just finishing all of the little intervals in between. So ultimately, this is the zone. I'm narrowing it down. Before I included all the way up to 38, I'm now narrowing it down a little bit, 43.15 down to 4,300. And we'll see what happens. Continue to trade what's in front of you. Continue to trade accordingly with the moving averages. It's okay to keep in mind where we are. Let's take some of this off so that we can see. Right now we're flat simply because the market is rather flat right now. But your moving averages should just continue to guide how you trade. And if I open this up, you can see we still are basically lined up to move higher, but we're just flat because the market is basically trading in a small range. Once things got going, look for all of your moving averages to be pointing higher, particularly the 8, the 4, the 20, and they're all the 4 and the 8. The 4 is above the 8, the 8's above the 20 is above the 50, the 50 is above the 200. That is an alignment. You can start with a 1, a 2, and a 5-minute chart. As the move really starts to look like it's getting bigger, pull out to your other charts to make sure you can confirm that everything's still in alignment. If we start to break down, same deal. If we're really going to start to break down, first of all, your 1, 2, and 5 moving, minute charts, your moving averages will go into alignment. And then as to try to determine the size or how deep this is all going to go, the selling's going to go, you start to pull out your 15, your 30, and your hourly. And if those again line up, then we're likely have reached a high and we're now beginning to drop. That's where I'm going to leave it. Next update will be Wednesday, June 30th.